Commission
according to the best of my skill and ability and in accordance with Chapter 15, Article 2 of the Code of the City of Winston-Salem, North Carolina,
in accordance with Chapter 15, Article 2 of the Code of the City of Winston-Salem, North Carolina, and the
general statutes of the state of North Carolina governing the retirement benefits provided by the North Carolina Local Government Employees Retirement System for time law enforcement where applicable.
I think we stopped at, and the general statutes.
There you go. Begin there, yes.
All right, and the general statutes of the state of North Carolina governing the retirement benefits provided by the North Carolina Local Government Employees Retirement System for members engaged in full-time law enforcement where applicable.
Welcome, Chairman.
Thank you.
Thank you.
Next, I have Lieutenant Edward D. Branshaw.
Present.
Okay, repeat after me. I, Edward D. Branshaw, do promise that I will faithfully discharge the duties of membership of the Retirement Commission as a member of the plan and will faithfully discharge the duties of member of the commission in accordance with the city code.
I, Edward D. Branshaw, do promise that I will faithfully discharge the duties of membership of the Retirement Commission as a member of the plan and will faithfully discharge the duties of member of the commission in accordance with the city code.
I, Edward D. Branshaw, do promise that I will in good faith execute the duties as member of the Winston-Salem Police Officers Retirement Commission according to the best of my skill and abilities.
I, Edward D. Branshaw, do promise that I will in good faith execute the duties as member of the Winston-Salem Police Officers Retirement Commission according to the best of my skill and ability.
And in accordance with Chapter 15, Article 2 of the City Code of the City of Winston-Salem, North Carolina, and the general statutes of the state of North Carolina governing the retirement benefits provided by the North Carolina Local Government Employees Retirement System for members engaged in full-time law enforcement where applicable.
And in accordance with Chapter 15, Article 2 of the Code of the City of Winston-Salem, North Carolina, and the general statute of the state of North Carolina governing the retirement benefits provided by the North Carolina Local Government Employees Retirement System for members engaged in full-time law enforcement where applicable.
Welcome, member. I have next Corporal Jason E. Swam.
Present.
Please repeat after me. I, Corporal Jason E. Swam, do promise that I will faithfully discharge the duties of membership of the Retirement Commission as an alternate member of the plan and would faithfully discharge the duties of member of the commission in accordance with the city code.
I, Jason E. Swain, do promise that I will faithfully discharge the duties of membership of the Retirement Commission as an alternate member of the plan and will faithfully discharge the duties of member of the commission in accordance with the city code.
I, Jason E. Swam, do promise that I will in good faith execute the duties as an alternate member of the Winston-Salem Police Officers Retirement Commission according to the best of my skill and ability.
Jason E. Swain, do promise that I will in good faith execute the duties as an alternate member of the Winston-Salem Police Officers Retirement Commission according to the best of my skill and ability.
And in accordance with Chapter 15, Article 2 of the City Code of the City of Winston-Salem, North Carolina, and the general statutes of the state of North Carolina governing the retirement benefits provided by North Carolina Local Government Employees Retirement System for members engaged in full-time law enforcement where applicable.
And in accordance with Chapter 15, Article 2 of the Code of the City of Winston-Salem, North Carolina, and the general statutes of the state of North Carolina governing the retirement benefits provided by the North Carolina Local Government Employees Retirement System for members engaged in full-time law enforcement where applicable.
Welcome.
Thank you.
I believe we move forward with the roll call.
That's correct.
Okay. So forgive me, this is my first time. Do I call the name first and then they answer, or does everyone just
That's
say their name?
correct. You call the name and then they will respond.
Okay.
Yes.
All right. So Councilmember Robert C. Clarke. Am I on, is this the right list?
You're right. You're right. He's not here.
Oh, okay.
Chairman. You're fine.
All right. Lieutenant Thomas E. Craven.
You're muted.
You're muted.
Present now. Thank you.
Thank you. All right. Lieutenant David L. Rose.
Present.
Lieutenant Edward D. Branshaw.
Present.
Captain Michael J. Cardwell.
Present.
Corporal Jason E. Swam.
Present.
Mr. Damon DeQuinn.
He's not here, Chairman, and that's all of them. That's good.
All right, thank you.
Mhm.
Now we will call for nominations. Do we have any call for a nomination for vice chairman? Don't everybody speak at once.
I nominate Elwood Craven.
Okay, we have a nomination of Elwood Craven for vice president. Do we have a second?
I would second that.
All right. So we're going to vote, and I believe, Ms. Saunders, you said that we have to vote by roll
You need to
call.
call the roll again. Yes, you do.
Okay. All right. So we're going to call the roll for all in favor. Or if you're in favor, please say yes. If you abstain, just indicate, and if you oppose, say nay. Councilmember Robert C. Clarke. I know he's not present. Lieutenant Thomas E. Craven.
I abstain.
Lieutenant David L. Rose.
Yes.
Lieutenant Edward D. Bradshaw.
Yes.
Branshaw, I'm sorry. Captain Michael J. Cardwell.
Yes.
Corporal Jason E. Swam.
Yes.
Okay. And Mr. David DeQuinn, is he joined yet?
He's not a voting member, Chairman.
Okay, now I'm voting.
Okay.
All right, so it seems that we have a unanimous consent. So we now have a vice chairman.
Congratulations.
Congratulations. All right. Okay, so now everyone has received the minutes from the last meeting. Is there a motion on the floor to approve the minutes?
I make the motion.
Okay. Do we have a second?
I'll second the motion.
Okay. And we will do the roll call again. I think our minutes have reflected that Councilmember Robert Clarke is not present, and Mr. Damon DeQuinn, who's not a voting member, he's not present, so I'm not going to call their names again. Lieutenant Thomas E. Craven.
Yes.
All right. Lieutenant David L. Rose.
Yes.
Lieutenant Edward D. Branshaw.
I didn't get the minutes, but I'll trust David Rose and Elwood Craven.
Okay. Captain Michael J. Cardwell.
Yes.
Okay. And Corporal Jason E. Swam.
Yes.
All right. So hearing none, the minutes are approved as presented. And now we will have Jack Sheffield from Alex Brown to present the second quarter investment review.
Thank you, Madam Chairman. Let me introduce, we have two members of our team on here as well, Mary Henshaw, who is my partner, and Lisa Cranford, who is head of operations for our team in case we've got questions that may come up. So what I thought I would do this morning is give you a little bit of an economic backdrop, what's happened, where we are, what we think is going on to the best of our ability. Then I believe, Meredith, you're in position to post some materials for us. One would be what's changed since the end of June, because a lot has changed since the end of June, and then our performance, second quarter performance, which obviously ended in June 30. Go over that very briefly, and then certainly answer any questions that may come up. This is, needless to say, an unprecedented time for all of us. So, any questions before I start here? Okay. In the news this morning, as far as stock market is concerned, we hit a new high for the year. So if you had been somewhere else, I don't know where you would have been in the world, but hiking the Appalachian Trail or whatever, and didn't know what was going on, you would think it's a pretty normal time. As we all know, this is anything but normal, what we have been through. And I would also say that bouncing back from where we were to where we are is anything but normal as well. So this has been kind of a wild ride. Keep in mind that on, so let's say right in the middle of March, we had a forced shutdown, which caused, it's the first time we have had kind of a policy recession, but it was swift, and the markets dropped significantly, and the low point was somewhere around the 20th, 25th of March. So first quarter did not look good at all. Second quarter, we bounced back a little bit, and we're still in the process of coming back. I mentioned that the market hit a new high, and that's the index, the S&P 500 index. And I dare say that a lot of people, it's been so hard to follow what's going on. You may not realize where is that, and just in terms of return. As of Friday, the S&P 500 was up 5.66%. So, and we're up a little bit from there. What we want to point out is that not all boats are rising at the same level. You have a handful of stocks, and you know the names: the Amazons, the Microsoft, Apple, Facebook, that have experienced significant growth as many of us have been shut in at home, and back in March and April when nobody was really going anywhere. So if you wanted to buy something, pick up the phone, call Amazon, and it showed up. We know that has certainly hurt a lot of other smaller businesses along the way. And what we have now is a long list of haves and have-nots. So in the market, and those five stocks that I mentioned now comprise 23% of the value of the S&P 500. So if you don't own those, you weren't up as much. If you did own those in the same proportion, you did pretty well. That's good news, bad news. To the extent that you own those stocks, you were a beneficiary. To the extent that you had other stocks, let's say things in the energy area and banking, they didn't participate as much in this bounce back. And I would, just as an example, the growth index, you have growth stocks, you have value stocks, which comprise the S&P 500, which I mentioned is up, let's call it 6%. The growth index, which is those, and you can include healthcare in there, they're up 20% for the year. Value stocks, on the other hand, which would be manufacturing, again, not technology, but anything in the materials area, banking and energy, that's still down 10% or so. So we have not all participants, again, are doing things at the same time. This rally has been led by large cap stocks, meaning the largest, strongest stocks. Then as you come down in size, mid-sized stocks, whether growth or value, would be up, but not up as much. And then what we call the small cap area, the Russell 2000, they have been kind of left behind in here. And that will change. It's one of the things that we'll talk about in a little bit. We do have exposure in the international area. Surprisingly, that has, and think of that as Europe, China, and Asia and Japan. It's still down for the year, but not down as much as the S&P 500. We have about 9% exposure from our equities in international, and that's from a high of maybe 18% 4 or 5 years ago. So we have been reducing that exposure correctly over the last few years. So, Tina, if you would post, not Tina, Meredith, if you would post I think you have what we call a change in value. Yeah, it's great. Okay. And this is simply, if you look at the bottom, and this is the part that has equities in here, left-hand column is June 30, 261 million. Then change in there, 284 million. That's a 23 million change just in the little more than 5 weeks since the end of the year, because the market, which had been moving up, almost accelerated after we got into July. That's close to 9%. I would point out, if you can see the percentages on the far side, Thornburg, which is one of our international managers, is up a little bit more than 12%. We have several that are up 9%. Once again, not everybody's up at the same percentage, but we wanted to show what's happening there. Can you show the next kind of half of that, which would be?
Wait a second, Jack. I'm sorry.
Yes, Tom.
And we need to share this with Ed and Jason, that these numbers are both the Winston-Salem Police Officers Retirement Fund and all city funds combined.
Right.
Right, Lisa?
Thank you. Mm-hmm.
So that our numbers will be separate, less significantly, but
yeah,
they're good numbers, by the way, anyway. But I'm just sharing with the new guys that this is all the city investments as a whole, which is handled by Jackson. Go ahead. I'm sorry.
That's a very good comment, and it is a balanced fund. So what we just went over there was the composition of equities. Meredith, if you can pull that up just a little bit higher. Yep, right there. That shows the next block there is really fixed income, which is about flat for that period of time, about 146, 145 million combined. All of the fixed income and equity, 431 million. That may be a new high. If not, we're very close to a new high for total assets. So that is a combination of city money to include the pension plan in there. So any questions on that? While
Jack,
I've got,
I do want to make one point that just to add to the other comment is that these are the total funds that are managed by an outside investment consultant and managers. However, the Winston-Salem Police Officers Retirement Funds are in an irrevocable trust, The separation allowance is in an irrevocable trust. Our other post-employment benefits are in an irrevocable trust, and then other capital reserves are in a revocable trust. And that makes up the total of these amounts. So I just want to be clear that the Whispers is in an irrevocable trust. And it's about 160 million total, roughly.
Okay.
Thank you.
Thanks, Lisa.
Just some more comments about the economy. I wanted you to see the result of what we have seen here in terms of a bounce back. So why are we having this? We're still in a COVID type situation. If you remember back the end of March, one of the first things that happened, the Federal Reserve, which learned a lot during 2008 and the recession we had then, they dropped interest rates dramatically. They are still low. The 10-year Treasury is about 63 basis points. That's 0.63%. That's why mortgage rates are incredibly low. That helps support banks. That helps support the economy, helps support borrowing. And they have not just lowered rates, they've been buying securities in the market and basically trying to keep the apparatus of funds flow and money flow in the bond area moving. Also, on the stimulus side, what has caused things to bounce back? The stimulus that has been passed, there are two that have been passed so far. I think you're aware there are negotiations going on right now with the Senate and the House to pass another round of stimulus. That's going to pass. Don't know what the number is going to be. The market kind of has assumed that's a done deal. We know it's not a done deal yet. Politics are involved there. Everybody knows it needs to pass. So sometime in the next couple of weeks, we will see something there. But that's when you combine all of that together, the trillions of dollars that have been spent to support us. Think of this as we shut down the economy. So we tried to keep everybody from going broke, businesses and people that were instantly unemployed. But the government has put in an incredible amount of money. That's debt that we all on our government balance sheet. So a long-term concern is what happens to that debt. So in addition to the stimulus that has been put in there, some of that, the unemployment benefits and money that was granted or given to companies to keep employment, a lot of that money has gone into savings. So the amount of cash that is on the sidelines in banks is huge. So it again, we're in a pretty good spot. The strange thing for us has been to see the stock market go up while if you work downtown, there's almost nobody downtown. I'm at home. A lot of people are working. They're at home, but we're certainly not in a normal environment at all. And we know that there are areas of the economy that are very badly hurt. Boeing announced this morning that more layoffs. Nobody's flying. You don't need new planes. It's going to take years for that to come back. So low interest rates has helped housing. It's helped in our area. Homes are moving very quickly. People are moving into the area. I had lunch yesterday with a gentleman who had come back from San Francisco. And in San Francisco, the home prices and rental prices are down about 15%. So what's happening there? That's an area that's struggling in some ways. There are high taxes in California, and people are leaving the city, and they're finding another place to live, another place to work, and that's people are free to go. So we're lucky that people are moving into our area. Let me talk about some of the concerns that we've got right now. I hadn't mentioned the virus. the virus is still out there. I think we're doing a better job now than we were in June and July. As I go out, whether I'm going to Home Depot or picking up a meal somewhere, almost everybody is wearing a mask. That's good. Our numbers are getting better. You will see the same thing that I see every night, but it has not gone away. If you look at mobility, that's the people that are moving around, now working, going different places. Car traffic is up. There are more businesses that are getting back to normal, so all of that helps. But we're still a long way to go here, and unemployment is still unusually high. We are all looking forward to a vaccine and it won't be just one. There are going to be numerous vaccines that will be available sometime in the future, fourth quarter, first quarter. People will have to decide if they're going to take the vaccine. Then we'll have to see the effectiveness of the vaccine. But what we should have happen is a change in confidence, a change in attitude, which then again accelerates the ability of people to go out and spend money, go to a restaurant, buy something, go back to work. I so look forward to that, and I know you do as well. In the meantime, just as I read that the market is at a new high this morning and the stimulus is coming, we are heading into, from a seasonal standpoint, September and October are the highest risk months historically that we have. And that leads us into an election that is, staring us in the face. We all are very aware of that. And when you get back from Labor Day, if you think it's bad now, it's going to be everywhere. You will not be able to avoid the information and flow of data there. So in the short run, I would say we are cautious. We could have a little bit of a pullback in here. It might even be appropriate. We're not predicting this. We're just saying that the market's done nothing but go up. But it typically it's up and down, and we haven't had any retraction to speak of in this market since maybe sometime in June. So in the short run, we're cautious. Longer term, as we get into next year, the economy's picking up more. You've got the stimulus that will help, and then hopefully vaccines will help things as well. So, any questions on that? I think our thought is that we will continue to grind. I'm talking about the economy now, not necessarily the stock market, but the economy will continue to get stronger. And as we get into next year, regardless of who wins the White House and whatever combination that we have in Congress, we think the economy will get better as we move forward. And then we see where we go longer term. Taxes are probably going to be an issue. Again, regardless of who's in the White House, we've spent a lot of money. I mean, we got to pay for that somehow. So, any other questions on that? Okay, I want to go over the performance again. Looking at June, Meredith, if you could post. Yep, thank you. And go forward till you get to page 5 there, if you would. One more page. Right there. Okay. Again, we're looking at June. A lot has changed since June, so the numbers are much higher from there, and they're all strong. So second, what you're looking at, that dark blue line at the top, 408 million, that's combined. Second quarter was a big quarter, 13.7 return for the quarter. The index, which is the where we would like to be, we're slightly behind that for the second quarter. On a year-to-date basis, pretty much in line. For the fiscal year, we're behind about 1%, and that is June to June, which is the fiscal year for the city. Right below that is the equity. You see the equity composite for the quarter. We're up 20%, almost 20.4. The blended index, we outperformed. That's 18.7. That's a good thing. That we're outperforming there on a year-to-date basis. So that is January through June. That shows being down 6%. Again, that would have been mostly in what took place in March and April, but the index is down 11. So, the term lose less is extremely important when you start to bounce back, and you see that for the fiscal year, that we're up 1%, and that blended index is still down 3%. Now, I'd make a point, if we only have index funds, and index funds are the cheapest way to invest, but we would be down 3%. We have a combination of index funds and what's called active management. That's somebody that's buying and selling and trying to be a stock picker. So when you throw all that together, the benefit of having that combination and stock pickers in some areas has benefited the portfolio significantly by outperforming. And all of these are net numbers, net of everything. On you see the 1-year basis, 3-year basis, still ahead, 7% to 4%, 5-year basis, 7-year basis. So that's what we're trying to do, is outperform. Now look at the fixed income area. A little bit on the other side there. This is total fixed income, 3.6 for the second quarter versus 4. Then on the fiscal basis, you've got 4.9, let's call it 5%, and the benchmark is 7. So on the fixed income area, we're slightly behind. So let me make a comment there. When in March, when everything changed so quickly, and there was a huge flight to quality. Quality in the fixed income area is government bonds. It's treasuries and agencies. And if you had anything other than treasuries or agencies, you were immediately down. That doesn't mean you're going to lose money. That just means that the pricing of that asset during that period of time was negative. And what we have been doing is working our way back up to par, so to speak. If you had a bond and it's worth $1,000, and then overnight almost it's worth $900, then on paper that's a loss, but it's still paying the same coupon, and it starts to come back to fair value. That's not just our portfolio, that's across the board. Meredith, if you can go up one more page there. And I'm going to go pretty quickly here. We've got, this is the individual managers. The first one, Piedmont in Durham, Piedmont Investment Advisors, pretty much in line here, 20% for the quarter, and I'm not going to go all the way across for the year. They had been running a little bit behind. You see the 1 year, 3.9 versus the index S&P 500 of 7.5. They had more of a value tilt. And again, from my previous comments, value was a little bit behind, so that reflects in their portfolio. They appear to be catching up. historically, they have been pretty much in line or slightly ahead of the S&P 500. Douglas Lane, right below that, manager in New York. And again, these are active managers for the quarter, up 23.7%, so 3.5% ahead for the quarter, but behind for the year. Again, a lot of these managers, they may be up a quarter, they may be down a quarter. They've provided a lot of value for us over the last 3 to 5 years. Their 3-year number is still ahead. Their 5-year number is flat. We think they will bounce back here. Then right below that is the Vanguard. This is just an index fund. That's what I'm saying. If it's up 19.6%, there's a little bit of cost to an index fund. It's slightly below the S&P 500. Then right below that, the Russell 1000 Growth, 27% for the quarter. This is an index fund. All you got to do is own it. Huge exposure to the technology stocks. If there is a concern, this area is not going to continue to grow at the same pace. Over the last year, up 22%. That's a big number. And it's done very well over the last 3 years, 5 years. We don't think they're going to run off and leave the rest of the market. Right below that, the Russell 1000 Value. Again, that's the other side of that coin, up 13% for the quarter. For the year, down 8.7. That reflects the rest of the market. Right below that, Schaefer Cullen. This is I think what we would call a lower risk manager, higher dividend. They have about a 3.8% dividend in this portfolio. A little bit behind for the on a year-to-date basis, but on a 3-year basis and 5-year basis, they are ahead of their index. We think that dividend, and they've had stocks where the dividend is actually going up. So we like what they're doing. Right below that is Nuance, which is an active manager as well, mid-cap area. Look at the second quarter, up 12. The index is up 19. So they're behind. But on a year-to-date basis, they have lost 9%, but the index is down to 18. So I think that's right. So again, they have, we're waiting on their portfolio to kind of bounce, but they have lost less, so they have added value to our situation. Same thing below, Ernest Partners, manager out of Atlanta, 23% positive for the quarter, beat the index on a 1-year basis, positive 2.9%. The index is down 11.8. This is how we outperform, by having managers that beat their index. Right below that is the what iShare Small Cap 600 Growth, $15 million, up 22%, and flat for the 1 year. I want to point out that we have what we anticipate happening over the next 2 years as the economy starts to broaden out and get stronger. Your small and mid-cap stocks should be larger participants in this growth. And we think that having an active manager in this small growth area is going to help us. So we have, working with the city, already made a decision to employ a new actively managed firm. It's called Weatherby Growth Fund. We're in the process of working on the contract, and we'll take that $15.8 million and we'll sell the ETF and put that money with Weatherby and hope they continue to do what they have historically and add value. Right below that, Systematic. This is, again, an example of an active manager that's helped us. And this is small cap value, which has been the most difficult area in the market. 18% for the quarter, fiscal year, down 12, but the index is down 17. They've been with us for since 1999. They average 2 to 3% net greater than the index. They've really been just a great manager for us. Right at the bottom, this is the the international exposure. Thornburg, again, outperformed a little bit for the quarter, 19 versus 15 on a year basis, positive 2.5 to the EFA index, which is the international index, minus 4.7. And then WCM, this is a manager in California, 25.6 million, has really been kind of off the chart on the upside. 25, almost 26% for the quarter on a year basis, 15.1% positive versus an index that's minus 4. That's a 19% differential there. They actually outperformed the S&P 500. Look at their 5-year number, positive 12.8% versus 2. We're lucky to actually to have this manager with us. We think they're going to close to new dollars. So we're happy to have them with us. Roll that up very quickly. I want to go over just fixed income. So that go to page 7, if you would. Okay, right at the top, this is the total fixed income, 146 million. Garcia Hamilton right at the top, our largest manager, 50.6 million. We've had them for a long period of time, very skilled manager. They're based in Houston. They haven't had the best positioning in the last 3 to 4 quarters. As they came into the year 2020, they were anticipating that the economy was going to accelerate, that interest rates were going up. So they were short, meaning they were had a much less average maturity on their bonds. As interest rates dropped, they were on the wrong side of the coin there. So they made money. They just didn't make as much money as if you had held longer average maturity. So that is the chief thing that has impacted our fixed income return. We are in the process of kind of rebalancing because we've had such a positive move in equities. We're looking at reducing our equity exposure. The city needs some of that money, and we're also repositioning some of the fixed income money. Right below them is Wells Fargo, very much in line on a quarter and 1 year basis. Right below that, Convertible. We have 2 convertible bond managers. Why? Because it is a type of diversification for bonds. Typically, convertible bonds, they're a hybrid. Part of the attributes of a bond, part of the attributes of equities. You see, compared to other bonds, they're up 15% for the year. That's been great. Federated Flex, 5% for the quarter, 9% for the year. That's in bonds, 9%. That's been very good over the last year. We won't see that going forward with very low interest rates. And they also outperformed, which is good. They have another portfolio, Federated Conservative, that is more tied to just treasuries and agencies. That's up 5%, very much in line with what's going on there. CWS Advent, another convertible manager, 12% for the quarter, significantly behind the convert index for the year, but they have a completely different approach. They're in there, they're more conservative. Their portfolio is starting to bounce back. We have them longer term benched against just the ag bond index, which they should easily outperform. So that has hurt us a little bit in the short run. Then Belhaven, another Another manager, good return for the quarter, beat their index, a little bit behind for on a year basis. They are starting to catch up. Right at the bottom, and last manager, this is the cash management trust. That's not a negative number. It shows a negative number, but this is essentially a money market. This is picking up the flows of money. This is a flow through for the city, and frankly, we've got to figure out a way to show their balance without having their that impact what is our blended benchmark. So that's not a misprint. It's just the way the tracking mechanism picks up the flow of funds there. Questions? Okay, Madam Chairman, that's it. We thank you for your time. A lot of things going on. We have some changes, as we mentioned, rebalancing going on behind the scenes. We've got another manager coming up. I would point out to everyone on this committee that we're following all of these managers in addition to the economy, the election, and we're trying to position this portfolio first for preservation. We want to grow, but we're also watching all of the unknowns out there, trying to be as cautious as we can.
Well, thank you. Thank you, Mr. Sheffield. We really appreciate your report.
Thank you.
Is there any other business for the regular session?
Chairman Flowers, I have just a couple things to mention to the commission members. First of all, I wanted to publicly have for the record that Captain Jay Edwards and Lieutenant Vince Riga, their term ended May this year. And of course, we didn't have a meeting. So I want to say thank you to them for their service and let you folks know that I mailed them a plaque and a thank you note and have talked to both of them and, just acknowledged how much we appreciated their service, and they say they're enjoying retirement. So just to let you know that. And the last thing is we didn't have an actuarial review because we didn't have the May meeting, but I think I said in an email to you that our 1/1/20 results are very good. The fund is stable, funded at about 85%, which is very good. The actuary's view is that in the next 5 years, we should move probably to a 90% level as the fund grows and we don't have as many members going into the fund. So to let you know, those were good results there too. And hopefully if we can end this year with our investment returns continuing to be, modestly going in the right direction, that will help us for our funding as we look forward to calendar year 21. So that's all I have, Chairman.
Okay, thank you. So do we have anyone that can move to go into, is there a motion on the floor to go into the closed session?
I make the motion.
Okay, there's been a motion made to go into the closed session. Do we have a second?
Second.
All right, and I will do the roll call so that we can vote. This is to go into our closed session. Council Member Robert Clarke. Oh, I'm sorry, I forget. I keep calling his name. He's not here. Lieutenant Thomas E. Craven.
Present.
Okay. And that's for the motion to go to close the session.
Yes.
No problem. Lieutenant David L. Rose.
Yes.
Okay. Lieutenant Edward D. Branshaw. Lieutenant Branshaw.
Yes.
Okay. Captain Michael J. Cardwell
Yes.
and Corporal Jason E. Swam.
Yes.
Okay. All right. So all has been approved. We are going into the closed session.
Madam Chairman, our Alex Brown team will be dropping out here now. Thank you for your time this morning.
Thank you so much, sir.
Chairman, I think
Okay, great. Well, now we're back in the open session. I love it when technology works, don't
I
you?
know.
Is there any other business before the commission?
Ms. Flowers, thank you for joining the board and appreciate your participation and your input and help us get through the meeting.
Thank you, thank you, thank you. I feel welcome. I'm apparently I'm probably butchering some names, but I'll get it right.
Look forward to meeting you in person.
Absolutely.
That will be nice. All right. Is there a motion to adjourn this meeting?
Motion.
All right. In a second?
Second.
Okay. All right. So there has been properly moved and seconded that we adjourn our meeting today. So I will do the final roll call. Lieutenant Thomas C. Craven.
Yes.
Lieutenant David L. Rose.
Yes.
Lieutenant Edward D. Bradshaw.
Yes.
Captain Michael J. Cardwell.
Yes.
Corporal Jason E. Swam.
Yeah.
Okay, so our meeting is officially adjourned. Thank you all.
Thank you. Look forward to seeing everybody, hopefully in person in November.
Yes.
Have a good day, guys.
Thank you.
All right.
You too.
Bye.
Bye.